Every year brings surprises. One of the surprises of 2023 is that the healthcare sector hasn't done better than what it's currently doing this year. As you look at the economy, we were either going into recession going into 2023, and now we're thinking we might be in a recession toward the end of the year. Who knows, maybe in 2024. And that tends to drive investors to go buy healthcare stocks because healthcare is something that people buy, whether it's a good economy or a bad economy. But that hasn't been the case. Healthcare companies have been underperforming the S&P index. And that's interesting. They're really good companies, very well run, and oftentimes pay really good dividends too. So I think there's hidden value that I'm expecting out of this sector. I'm looking at companies and investing in these companies, expecting that their stock prices will go up. They will go up maybe in the remainder of 2023, 2024, and 2025. My name is Victor. I have an MBA, a lot of business experience, and I like analyzing companies that I want to invest in. In this case here, I'm going to look at the healthcare sector, tell you why I think it's a really good sector to consider as an industry to buy companies in. And I'm going to review a couple of stocks as well that I believe are good buys, and I continue to buy shares into those companies. Do me a big favor and like my video and subscribe to my channel. I'd really appreciate that. Now let me get into the healthcare sector. Now, what makes a healthcare a good sector to invest in? It starts with, really good solid barriers of entry. And this is what I mean is if you're a pharmaceutical company and you have the patent to a particular drug and that drug is needed by people who have a particular disease or need it, you have a pretty strong barrier of other competitors coming in and selling that drug. Another barrier you could see in United Healthcare or Elevance, where they have this network of employers that offer healthcare insurance to their employees. It's very hard to disrupt that because companies are not going to change their healthcare providers, year after, every year. It's going to be a very slow turn to change those healthcare providers. So those barriers of entry enable a company to really operate profitably. In many cases, they get to grow because if they have a very good drug or a very good program like United Healthcare or Elevance, they can continue to grow their membership. And those companies tend to be really, really prosperous. So those industries are the industries that I look for to invest in. Some industries don't have strong barriers of entry. For example, discount retail. Discount retail is not very difficult to get into. You need to lease out some space, buy merchandise, and then try to beat out your competitor with price. So that's not very much of a barrier to enter that space. And I can go on and on, like I would also say restaurants. You can open up a really good restaurant, but you're competing against, 1,000, if not more, restaurants in your city, and they are all providing recipes that they believe are delicious. So it's very hard to keep competition away. But I like healthcare because they do have natural barriers of entry, and that makes these companies enable them to operate more profitably and generate more free cash flow. Looking at where sectors have been performing, the number one sector, I think everyone would guess it right, is information technology. This is where NVIDIA, this is where Meta, Google, Amazon, this is where Microsoft and Apple are operating, is in this industry. So you can see that this year to date, it's up almost 38%, which is great. The S&P is up 14%, which is great. Other industries that are doing okay are consumer discretionary. I think this is where some of those products, and I believe this is truly where Amazon is, and potentially Apple. Communication services, this is Meta, Alphabet, Google. So that's where those sectors are. But you have healthcare, And healthcare is actually down 2.11%. And if you look at it from a historical perspective, they actually have done really well over the last 5 years. In fact, they are only second to technology. So they're the second best sector over the last 5 years. But this year, they are down. So healthcare is down in 2023. And that's been a surprise for me. I think it could have, I expected it to do better. And to me, that's where the opportunity starts. Buy when prices are low into companies that you believe are going to be valuable and will go up in value over time. So that's where the opportunity begins for me. Here's a list of the companies in the healthcare sector from the biggest company based on market cap. This is probably the top 15 companies in the space, starting with Eli Lilly, United Healthcare, Johnson & Johnson. And going down the list, there's Pfizer, Abbott Labs, Amgen, Bristol Myers Squibb, and then Elevance Health. So you can see these are just mega large companies. They've been successful for a long time. I happen to think there's stability in this space because these companies really know what they're doing. They've been around for a long time. And a lot of them pay really nice dividends. For example, AbbVie is paying over 4%, Pfizer over 4%. So you can really buy into an investment that I think is going to go up over time, and they'll pay a nice dividend along the way. 7 companies in the healthcare sector that I track closely are listed here. When it comes to insurance, I own and I continue to invest in Elevance Health. I used to own United Health, but felt that Elevance is just operating more efficiently with greater profit and greater cash flow. They pay a small dividend. I own a pretty good position at $45,000. I'm up just a little bit at 3%. And I think that there's 45% upside. So I'm going to continue to buy shares in Elevance. CBS, I think a lot of investors, and if you go around YouTube and look at other investors, CBS is expected to go up by many people, including myself. I think it's undervalued by 81%. And what I think is there's a discount on CBS. And the reason for it is they're really profitable. They're growing really well, more than 10%. They're already a significant size company. They're well diversified. They're a pharmacy combined with a healthcare insurance company. They're doing generic drugs. They're providing actual healthcare services in some of their locations. So I really like where they're taking their business, and they're doing it, growing the company and at a profitable rate. Even having said all of that, the market doesn't believe it. And the market actually, I'm losing money on this investment at this point, but I'm going to stick around and I'm going to keep buying shares because I think it's discounted. And I've got to stick to companies that I believe in. They pay a nice 3.59% dividend right now. So that's a really nice dividend to collect on CBS. AbbVie, this has been a really nice stock for me to own. I've owned it for a long time. And right now, I'm just up a little bit on AbbVie, up 3%. I've got a position of $56,000 on AbbVie, and it pays a 4% dividend. I like the dividend it pays, and I really believe in this business. One of the primary drugs that they produce is Botox, and that's a cash-based drug, meaning it's not covered by insurance. So patients go in, they get their treatments, they pay cash, which is really lucrative for AbbVie. They have a variety of other drugs as well that they are more traditional pharmaceuticals. Pfizer, I started buying into Pfizer years ago. And at one point I was up significantly on Pfizer, but the market just doesn't like Pfizer. I'm down 17%, but they pay a really strong 4.5% dividend. And I continue to buy shares because I think the stock is discounted more than 50%. So I'm going to keep buying shares in Pfizer. They have a lot of cash on their balance sheet. I think that part of what the marketplace doesn't understand is that during the COVID years, when they sold the COVID vaccines, their revenue just shot up. And now we're trying to work through, year over year comparisons where you don't have a vaccine sale in the current year to compare to vaccine sales in the previous year. So that drop in revenue, I think, makes investors nervous. But overall, the company's profitable. They generate great free cash, and they pay a really strong dividend. So I'm going to continue to buy Pfizer. The next company is quite small. It's Catalyst Pharma. They produced a really effective drug, and they have a probably narrow range of drugs that they provide, but it's a treatment that's really effective. So they're very profitable and they're growing really well. It's been a good investment, returning 16%. I have a small position because this is a small company. I don't want to bet too big. Got just less than $7,000 of that stock, but it has really high upside. So I like having it in the portfolio just so it can give me some good upside. And I really study the company quarter after quarter to see if I want to put more money into this particular stock. CareTrust is a company that is a real estate investment trust. They provide healthcare facilities and long-term stay facilities for older people that need healthcare while they're staying in one of their properties. And they have been a pretty good return of 8%. And they pay a nice 5.6% dividend. So nice little investment in this company. They're sold currently at a premium, and this one would fall in the category of it's better to pay a fair price at a very good company as opposed to getting a good price on a terrible company. So glad that I'm a stockholder of CareTrust. The last one's a really high risk REIT, Medical Properties Trust. They've had a lot of trouble because one of their bigger tenants can't pay their leases. That's really created a lot of financial struggle for the company. I have a small position in MPW, but they pay a high dividend. And if they can get their problems resolved, I think this stock can double or triple in value. So it's good to have a stock like that. That's a long shot, but really have to be careful with how much money I put into it. So as you can see, I'm an investor in healthcare and really believe in the space. And it's been a surprise that it hasn't performed better given some of the economic conditions that we find ourselves in 2023. So I'm going to keep investing in healthcare related stocks. Again, historically, they've done really well. They have really good barriers of entry into their particular businesses so they can hang on to their revenues, grow their revenues. The addressable market is massive. This particular sector continues to grow, especially like pharmaceutical companies. They have a drug that works in the US, that's great. Then they can start selling it in other countries. And that's also part of the revenue stream. So I'm going to continue to invest in companies like these. And I expect that their stock prices will rise over time. And most of them pay a really nice dividend rate, which I like. So that's my video on the healthcare industry. I hope you found it interesting. Do me a big favor and like my video and subscribe to my channel. Really appreciate it. Good luck investing in 2023.